Another really fascinating topic about how private equity is being democratized. It's been a theme that's been highlighted in a number of panels already, and I'm pleased to invite Nick Fitzpatrick to bring his panel up to stage, who are going to talk about it in a bit more detail and share their views.
Good afternoon, everybody. Thank you to those of you who stayed, and thank you to those of you who came in. We're going to talk about the broader prospects, or making the prospects of bringing private equity to the retail investor. Now, I first became aware of this topic maybe about 2 years ago, I think at the last IPEM that I attended just before COVID. I'm aware that some of you and some of the panel may well have been speaking about this more, but that is nevertheless when I became aware about it. I know it's a thing, it's a growing topic, and that's what we're going to discuss today clearly. So for the past day or two, I've been going around some of the GP firms here saying, this is what I'm talking about tomorrow. What do you think about it? And a number of the firms that I spoke to, if there's any commonality between the firms, they would say, well, this is a way to connect real people, as it were, with the real economy. And they were saying that the liquidity and the lock-in periods, which generally would match people's investment horizons anyway, if you give them more liquidity, they're more likely to make mistakes. However, if liquidity or illiquidity is an issue, there's a buoyant, growing secondaries market that may help with this. And at the end of the day, technology, tokenization could, of course, help in the distribution of these funds to a wider range of investors. Now, if this panel can have the same level of conversation that we just had over lunch about this topic, it's going to be a great one. If they can speak only half as well and comparatively as openly as they have been doing, I know this is going to be a really good conversation. So my name is Nick Fitzpatrick, the editor of Funds Europe magazine, by the way. And if I can just ask my panel to begin introducing themselves. Gorka at the end, please.
Hi, everybody. Nice to be here today. The light is a little bit strong, but we'll manage. I'm Gorka Gonzalez. I work in BPI France, which is the French sovereign fund in the fund of fund business line, and I'm in charge of the retail new activity within BPI.
Hello, Marie-Jaco Cardoen. I head up the sales team at Edmond Rothschild Asset Management.
Hello, everyone. I'm José Luis Segimon, heading private markets investment at BBVA. We invest both for pension funds, we're the largest pension fund manager in Spain, and for private banking clients, mainly through fund of funds. We've raised already 6 private market fund of funds.
Hi, Frederick Meehes, MD at Moonfair. We try to democratize access to this asset class through technology.
Thank you very much. So obviously we're hoping to learn some of the most recent developments in Europe and what the people on this panel are actually doing with regards to this topic. Can we start, panelists, by let's just define exactly what we mean by retail. We all know what we mean. We usually talk about the individual investor, but let's just clarify it, that we're not straying onto the territory of the high net worth investors. So Jose Luis, I'm going to come to you first on this one. Who is the retail investor in this context, really?
I think retail investors should be any investor, anyone trying to invest in equity or private markets from very low minimum amounts. Then afterwards you're going to talk about this. No? But in Spain, for example, up to now, the minimum investment ticket for a private equity Spanish fund was 100,000 euros. That's not retail.
No.
Last week, the law changed and it's been approved to bring that level to 10,000 euros. That's closer to retail, I think. But it's 10,000 as long as it's not more than 10% of the assets that the retail investor has. So you need to have 100,000 to invest 10, no?
Yeah.
In a private equity, in a Spanish private equity fund. But I think that when we talk about retail, it has to be to any investor wanting to invest from 10 euros, 100 euros. There are a lot of issues with this, no? Especially a commercial bank like us, we need to be very, very careful. Always from an advisory relationship agreement with the client. No.
Yes, thank you. Yeah, Gorka, what would be your definition?
Let's say from our perspective, I'm talking from BPI France position, we are talking about non-professional investors. So our second fund, the minimum ticket is 3,000 euros. And we believe, of course, there is MiFID II knowledge and experience, the suitability, but we should go even further.
And Marie?
So for the purpose of the PE retailization, the minimum for an investment in our feeder fund is 125,000 for qualified investors, and 5,000 for the life insurance product in France.
Right, okay. So very retail-y at one end at least. Frederick, what do you think?
Well, if you have an hour, I'll give you 28 definitions. That's the number of countries we have and the number of regulations based on what Jose just told, right? So we want to give actually even more than 28 definitions. In the end, it's the distributor that decides who to go out to, as just highlighted, and we're just going to adjust the access or the door, as we call it, in function of the definition that each of the distributors gives. So you want to do 125, we'll make it 125, but we'll screen the qualification, which Jose has highlighted. And the good news is the thresholds are getting lower, and I see the regulation, whether it's in Italy or in Spain, constantly adjusting. That means that we need to adjust. But sadly, there is no European regulation yet. It's country by country, and I don't see that changing anytime soon.
Right. Okay. So I mean, I think the LTIF is about 10,000 euros, isn't it? That's a general kind of might be an initial benchmark for the industry to think about, I suppose. But Frederick, I'll stick with you. I mean, in general terms, do you think that private equity firms themselves would welcome retail money? Would they welcome this development if their asset class was made more broadly available?
Yeah, I think if we're not convinced of that, we saw 4,000 people in this conference, I think this has been absolutely, by the GPs, a topic that they have been focusing on for so many months, not years yet, but I can tell you that I've never seen an investment in this industry that is that big as what is happening in the focus of the GPs towards wealth. The way we see that is that if you were 100% concentrated in Insti and some of your own clients start to be your competitor because they set up their own funds, then people have to diversify in wealth. They want to diversify in wealth, but there's an awful lot of investment needed by the GPs to be able to play this game, because it comes with so many different requests vis-a-vis the typical institutional coverage, right? So, and that's why you see, whether it's from a sales perspective, marketing perspective, product adjustments, you see a lot happening, and that's why I think we have 4,000 people in the conference here and not 500.
Mm-hmm. Jose Luis, yeah, thanks.
May I add? Yes, in our case, the pension funds we manage were already at 10% strategic asset allocation to private markets. So with the public markets correction, that 10% move up to the denominator effect up to 11%. So we will probably not be making a lot of private markets commitments this year from the pension funds, but we will be making commitments from the fund of funds that we manage for our private banking clients. So GPs welcome, even though probably those are smaller tickets, but they welcome money from us on a recurrent basis, whether it's from the institutional pocket or from fund of funds, which is private banking, and hopefully with the new regulation, more retail, more mass affluent private banking.
I think there is a sustainable trend, and then I put my investor cap. We deploy 1.5 billion per year in funds in BPI France. In the last 6 months, I met 15 GPs coming to me and asking how can we target retail investors. Small, middle-sized GPs, 500 IUMs, 1 billion, but it's pretty new, this trend, but I think it's a sustainable trend. Even in the offer side, the players are starting to think how we can target retail investor to diversify our investor base for any reason, to share the value creation, but there is a trend.
Okay, there's a trend, there's a desire. I mean, I'd be interested to know as well to what extent the service providers to the PE firms would also welcome this development. I don't know if there are any fund administrators or custodians in the room, but perhaps this is something we might come back to later. But Jose Luis, I'm going to come back to you with this one as well. I mean, what do you think about, are there enough investment opportunities to absorb this money from the retail market? I mean, we've not actually put a number on it, but let's just assume it's a huge amount of money. Are there enough investment opportunities, without going into all the intricacies of PE ratios and this kind of stuff, just in broad terms, can the PE industry absorb this sudden onset of new money were it to happen?
I think that with no doubt, yes. In Spain, we've got 250 listed companies. And we've got more than 30,000 companies, SMEs, with more than 50 employees. I mean, the wider the investment range for any investor, the better. And I think with these numbers that I've just given, that there's a lot to be done by private equity, by GPs in these 30,000 companies in Spain, no? Efficiencies, professionalization, many of them are family-owned companies, etc. So bringing professional management to some of those companies, 1,000, 2,000, but it's still at least in number, maybe not in enterprise value, but in number, I think there are still a lot of investment opportunities for the GPs, not to talk about real estate. I mean, in Spain, we've got a very few, they are called SOCIMIs, which is equivalent to the real estate investment trusts. And the investment universe in the real estate area is, I mean, huge, no? That's another investment opportunity for the GPs in private equity real estate. So I think, yes, they are. And I'm not worried at all about that for now.
Yeah. Is there such a thing as an appropriate investment through private equity for a retail investor and an inappropriate one? Anybody? Marie?
I think we probably all agree that there's a case to be made for retail investors to access long-term investments opportunities such as private equity. I think the mistake that we ought not to make is to confuse retail and liquid. And that's, that's something that, has been a source of confusion in the past. And, thinking about some of the real estate funds in Germany, for example, a few years ago that, had to put gates, for example. That's not the situation that we want to get to. So I think it's more a question of what's the format going to be for retail investors to access private equity, what's going to be the legal vehicles, what's going to be the strategy, what's going to be the embedded liquidity. So for example, in France, I was mentioning the life insurance products that offers private equity. You tend to have a 30% liquidity, and that's required for that product unless you have an insurance company that backs you up. But everything has a price, and there's a trade-off to be made and to be understood by the end clients, which is, yes, you can access those long-term illiquid products, and therefore the return that are, offered. And quite frankly, private equity has been the winning asset class over and over and over again. But if you want more liquidity, then the returns are going to look different.
Gorka, you were nodding your head there. Have you got thoughts on this liquidity question?
I mean, you mean from a BPI point of view, how we manage? Well, yeah. Let's say yes. How do you manage it? I think we come with the question of $1 million, the liquidity. Yes, you can access, and we are really transparent and clear on this point. You can access to an asset class which generates higher returns, but at two conditions. The first one, it's a longer holding period. And we are talking about, in our case, 6+1, and it's really short for a private equity fund. It's a secondary fund of fund. And the second one is you have to accept illiquidity or illiquidity or limited liquidity during this holding period. And if the investor is not able to understand or to accept these two conditions, maybe he has to trade another asset class. But I think it's a really good question. We already had experience in the past with listed private equity. It's already down and exists in the market. There is the open, the green evergreen fund. So when you are target retail investors, you need to be more transparent, more clear on this point, for sure.
I think Jorge's point is very important. It's key. I mean, illiquidity, it's very important. But not only that, it's investments in private equity funds or private markets funds. There are no voluntary refunds. You can own a house which is illiquid, but decide to sell it in 6 months, in 1 year. It may take you 2 years to sell it, but you've decided to sell it and or to get money back from that investment. In private markets, the closed-end funds there's no willfulness in the redemption. So we need to be when selling these products to retail clients. At least we don't sell them to retail. What we do is in our best advisory capability, tell them, okay, this is a good investment. Diversify your portfolio, but take into account that you will not be able to ask for your money back. The GP decides when to give you money back after the 5 or 6 first years. So.
And maybe just to add to that, I first completely agree that we shouldn't confuse the investors, and I think one of the things that makes me scared is the concept of semi-liquid. I hope that people do understand the word semi and that they don't forget it and think it's liquid. So that's a trend that is super strong. I think it's a little bit stronger in Asia than here in Europe, but that's definitely one. On our side, we try to use technology to provide liquidity. We by no means want to create another ETF. I used to work at BlackRock, so I've done that enough. But what we want to do here is offer 2 windows of liquidity, paths to liquidity, where in spring and in autumn, twice a year, we let the users of the platform be able to sell their position if they would like to, and actually in a sort of blind digital auction, sell it on the platform. We've enabled everybody to do that. Of course, very much agree that there might be stress periods where nobody is interested to buy. That's why also we partner up with Lexington to see that there is an institutional buyer in that sense on the digital platform.
Gorka, can you tell us a little bit more about the experience in France with this fund and facing the retail public? What was the uptake like?
Yeah, sure. Just to introduce, BPI France is a new activity for BPI France. We are the bank for entrepreneurs. In France, we manage 50 billion of private equity, 2/3 direct private equity, 1/3 through funds. We decided to launch this retail activity to facilitate the access to the asset class and at the same time to capture private savings and to inject in the private equity ecosystem in the real economy. Well, I will share with you our secret formula, which is we tackle 3 objections coming from retail investors. The first one is market risk. Private equity is really risky. Okay, so we over-diversify the fund. The fund is a fund of fund. The second fund is 126 underlines that represent almost 1,500 non-listed companies. The second objection coming from retail investors was, okay, but this is too long. Private equity, we are talking about retail investors. They can need their money in the coming years. So, okay, let's try to do something shorter. It's 6 years, and because we structure as a secondary fund of fund. We slice our own portfolio, vintages from 2010, 2016, and we structure in a retail vehicle. And the last objection coming from retail investors was, okay, but that's really illiquid. That's true. The underlying is illiquid. The average holding period is 6 years for a buyout company, but let's try to enhance the liquid profile of the fund. And then, for instance, our fund already get back 40% of the commitment. The fund is October 2020. and we try to get back 20% of the commitment per year. It depends on the context, depends of the activity of our underlying managers, but as from today, we succeed. So that's why that was our answer to the market. It's a niche. I mean, it's the retail segment for retail investor who manage between 20 and 100,000 euros in wealth management. I mean, so we are really talking about retail.
I mean, the LTIF fund structure, in the EU was meant to, be the answer to this question, really about bridging private equity with retail funds. We know, I think most of us will know, it's had a difficult few years. It's currently being rethought. I think proposals have already been set. Now, I know, Frederick, you said in a call before this panel today, you think the LTIF is going to be the biggest trend of 2023. Can you elaborate on that?
Yeah, to some degree, I think this industry resembles sort of the fashion industry to some degree, and we're trying definitely to bring up trends. So LTIF is one of the trends. The other one I've already highlighted is semi-liquids. The regulation, I'm Belgian, so I think I know where Brussels is rather difficult. So the structure, the intention to bring a very accessible vehicle was very good, but was made very difficult. But difficult goes as well, and we're having an awful lot of discussions with GPs to structure LTIFs. Still 1.0, there is talks about 2.0, but let's see how fast they are in Brussels. At the moment, we're really believing that as of early next year, it'll be quite a big trend with distributors distributing, to your point, as of 10K. The difficulty is if you sell a fund of 1 billion and your average ticket is 25,000, then there needs to be good back office providers that are really digital to be able to do that. And that is why, to some degree, again, we feel that technology can help to bring an LTIF in a very efficient way through a scalable distribution platform using technology. And of course, a good underlying fund. And I do think in the beginning, people had a bit of sort of discomfort with trying to obey to all the rules, but in the end, we found with quite a few GPs the solutions, and we think that this is going to be a bigger thing. Currently, I would say 4 or 5 managers have offered an LTIF. I wouldn't be surprised that next year we're coming with more like 20, 25 LTIFs overall from this industry.
I think the figures are that 8 billion have been raised. I think 50% of that comes from institutional clients, and then 4 billion come from retail clients. So LTIF has not been a success, and I agree. I think there are 2 key elements why this has happened. First, it's an operational issue. For example, we at the bank, we have not, even though we've launched 6 private equity fund of funds, we are still not able to make capital calls. We make one single capital call at the end of their fundraising period, which is not very good for the IRR. It's okay. It has no impact in the multiple, but it affects obviously the IRR. But systems are not prepared, at least in our case. We are working on it, and probably next year we will be able to make capital calls. So that's one key point, I think, that why it didn't work, because big distribution channels didn't have the systems. And then the other point, I think, is that GPs didn't want to. Not many of them were offering or targeting retail clients. And I think that also they couldn't meet the LTIF requirements.
Yeah, so significant operational problems by the sounds of it. Please, go ahead.
Frey, you pointed out a key point is access. Because we want to go into the retailization, the access is just key. Access, you mentioned digital subscription process online should be seamless, efficient, and this is something that we have to work in the coming years to open the asset class in the open way. And the second one is minimum ticket. I mean, you democratize when you load this minimum ticket. So LTIF could help, of course. We'll see what LTIF 2 will be. But access is key. I think digital, let's say, subscription process and the minimum tickets are two topics that will be key to democratize the access to the private equity asset class.
Marie, you know, in the kind of retail UCITS funds world, it's possible, of course, to mix the money, institutional investor money, with retail money, and that's often done in UCITS funds. Now, I've no idea if this would be any help or not, but operationally speaking, would it be possible, do you think, to run both types of investors' money together in private equity funds in future?
Well, I think that's the idea. Ultimately, to give access to the same level of quality assets to retail investors. And as we were saying before, I think the question is whether we can do it in the same format. And I think the answer that we've all come to is that it can't be the same product, because retail investors tend to be less sophisticated. The volumes tend, even the size of the minimum ticket tends to be much higher, and therefore the operational risk tends to be much higher too. So I think we've been turning around the fact that there's an ecosystem that needs to be created to be able to run institutional and retail money as a GP, and that ecosystem is really making sure that you have the right technology for onboarding, for subscriptions, for capital calls, for reporting, so that the experience and the access is as smooth as possible for the investors, the end investors. There's the training and the education around what it is and how, especially for a retail individual, that needs to have a diversification in their portfolio, where to put private equity, what's the allocation to private equity, what it is about, and so on. So there's an education to be done. It's obviously the GP level, but they know how to talk about it. But there needs to be a retail narrative that's easy to grasp, so that private bankers can talk to their end clients and they understand what they're investing in. There's also the fees, and we haven't talked about it yet, but I think it's more straightforward when we talk to investors that are institutional, because it's been there for longer, and I think the fee format is more it's more well known, and it's
acceptable.
been more uniform. I think when you talk to there's a lot of mouths to feed in the process. You have the GPs, the distributors, and we're talking about democratization. We've seen cases where the fees were not very democratic. So that's something that needs to be addressed, that will certainly be a focus for the regulator, and that will not, if not done properly, will not foster the trust, I think, that's needed from retail investors to really want to engage in the asset class.
Great, thanks for that. Jose Luis, you mentioned about distribution channels and the maturity of them. I mean, I note that there was an IPEM research a couple of years ago, I mean, a little bit before COVID. I remember reading it back then, and it said that just over 70% of respondents felt that advisors and distribution channels were not mature enough to, bring retail and private equity together. That's probably no surprise if it's not being done on any grand scale at the moment. But I suppose, Frederick, I come to you with this, because, I mean, you're very much there with Moonfarer about bringing investors together with GPs. What do you think to the maturity of the retail channel?
Listen, family offices, many family offices has for a long time allocated to this. Insurance companies' balance sheet have done it. I would say in Europe about 15, 20 wealth managers have for many years been offering this. The rest have done almost nothing. There's studies from well-paid consultants that said that 5% of the portfolios are filled with private market components. I'm not sure what calculation somebody has applied, because I would get less than 1% for sure. Every wealth manager we talk to is currently busy with at least thinking about allocating to it. The question is then, as highlighted, how do you operationally do that in a scalable way? How does the fee justify things? What's the role of the distributors? I think is essential. I do think this is in most cases a very advised products. So people need to think about that, integrate in the advisory model. But I can tell you that the number of conversations we're having, whether it's with family offices, digital players, banks, wealth managers, is gigantic. So this is an asset class that people will want to take into their portfolios, and I wouldn't be surprised that over the next 2 years that we will finally going to get to the 5%. Right? Let's see from there onwards. I have very good hopes that, back to the regulation point, that if you would really democratize, because if I say to my mom with democratized private equity, it's only 100,000 euros, she'll look twice at me whether I've drunk too much. But I'm really hopeful that the regulation will go as far as, let's suppose for a second I'm 25 years old, I'm not, but I have 40 years to work. Why could you not allocate 50 euros every month from your employer to a private markets product? Like we're all talking about illiquidity. I don't think there's a better product for that. I don't know why we're not allowed to it. That's why we're looking very hard into 401ks in the US and the changes in regulation there, because probably it will happen there first and then with us. We're looking heavily into the UK, LTAFs and that whole regulation. So I'm very hopeful that the distributors, the employers and such will start to democratize. Of course, very much accepting, and I think 2 panelists have started off with that if you can't take a liquidity, you shouldn't be in this asset class. But again, in a longer term context, longer term saving and investing, I think this is a super logic component. Again, not super risky ones, but well diversified ones. But so I'm hopeful. The action is there, and I hope the allocation will follow.
Gorka.
That's really good news, guys. The penetration rate of private equity in France for individuals is less than 1%. It's 0.2%. So the business is huge, and it's win-win business. It will be challenging because today most of the banks and wealth managers don't include private equity in their strategic asset allocation. So as you mentioned, it's an advisory business. Advisory is consuming, it means investment recommendation client by client. But the potential is there. And the potential, we could free this potential through the digital and with suitable products for this segment. As you mentioned, really well diversified to mitigate the risk.
Thanks.
Nick, one question, very quickly. We back in 2006, we launched our first private equity fund of funds. And because of the constraints you were talking about, liquidity, our clients wanted liquidity, we decided to list it. So we listed it in the Madrid Stock Exchange. It didn't work out very well. As an example, the last share price, the last quote was 9 euros. And the distribution, the last distributions through the NAV was 26. So, I mean, the market price didn't reflect at all. There was no liquidity, no volume, but from time to time we had orders, no? But the vehicle was small. We had like 300 investors, not enough so that the vehicle didn't have natural liquidity. You needed to be as a market maker, very active, buying and selling. And we ended up as a bank owing, we bought up to 20% of the vehicle. And if we had continued, we would be owing 50%. So, I mean, we've been trying hard since 2006 to give access to our clients, but that's an example, and we need to improve our offerings. Yeah.
That was back in 2006. You say 2006.
2006, yeah.
A little bit too soon then for the market, right?
It was very soon.
I mean, we'll be wrapping up in 10-ish minutes. Are there any particular questions, any burning questions from anybody in the audience to ask this panel? Okay, the lady in the front here.
Just a quick question around evergreen products. Do you see a preference for the evergreen products because of the liquidity that they offer, or are you agnostic?
Do you see a preference for the evergreen products that are on offer because of the liquidity that they offer? I think that's...
Yes, I think it's definitely something that we're considering quite seriously. I think the easier and the smoother the process is, the better. So whether it's having an evergreen fund, managing to create a product with some yield embedded in it over the life of the product is another thing that we could consider. I think there are many options, but absolutely, yeah, I think for retail investor that would resonate.
Yeah, so some call it evergreen, some call it semi-liquid. So let me, if everybody does what it says on the tin, I'm a full buyer. So most structures that we have been looking at, we've been doing massive work over the last couple of weeks on it. They save monthly 2% liquidity window, up to 5 for a quarter, maximum 20%. So at a long career at BlackRock, I had only one bad year when people were gating hedge funds. I know that the 20th percentile that gets out will be very happy. The 21st that gets the door slammed on them will not understand it. So, by the way, there's people that have gated in this space not that long ago. So that's why I love the principle, right, of offering liquidity. I hope we're going to keep the promise because nobody's actually guaranteeing anything. It is I'm going to do my best effort. So I love the benefits, but I, to some degree, would like to really avoid the risk because otherwise this could be a very, very empty IPAM very soon.
There were 2 or 3 hands up over there. Okay, gentleman there, thanks. Okay, yeah. Mm-hmm. Okay, so we heard a view. I'm aware, obviously not everybody could hear that. Sorry, I know. But we heard a view there from the service providers with a question, I think, finally at the end about what does the panel think about the risk profile. I think Gorka, you were.
No, I just coming back to the liquidity. I don't have the answer, but when we come to retail investors, we need to be really clear and put big disclaimer in the marketing documentation because the idea is wonderful. I think we align on the liquidity benefits, but what happens in case of a stress market? We don't have to overpromise these liquidity capacities. Now, maybe coming to the fund admin, it's an interesting point because we haven't told about the constraints of scale up the private equity industry to retail investors. What we're seeing right now in the market with our counterparties, they're starting to be a little bit constrained because of the volume of the number of investors. When we come with 3,000-4,000 investors in one single fund, custody banks starting to collapse. And we have this discussion right now. How we can continue to scale up the business for retail, but we are not talking anymore about an investment base of 200-300 investors. We are talking about thousands of people. So we have really in-depth discussion with custody banks, and I think it's a sustainable trend. if the custody bank don't move and to provide solution, we will find solution in the technology, in the blockchain, the tokenization, in other ways of, sharing the asset class, split in small tickets. There is a real question regarding, let's say, fund admin and all the stuff around how you structure, how you manage capital costs, distribution, valuation, investor reporting, and so on.
Thank you. Frederick.
Yeah, I think it's a very valid point, Holger. So I'm really hoping that our first LTIF, which we bring out early next year, will have 10,000 underlying customers, okay? So how is that possible? Because we send the capital calls that we get from the GP. Let's say the GP does a €100 capital call. We'll split it up in 10,000 lines. That goes automatically out from the system. Payment matching happens. We'll send 10,000 reports from the fund perspective on the performance, and we'll send 10,000 tax reports, right? You try to do that manually. I wish you good luck. That's why what we did initially at Moonfair is scale up the front, but if the back end doesn't follow, then nothing can be scaled, right? So where is the block in the middle? And that's why, whether it's through blockchain, tokenization, or with other techniques, we believe in full digital from front to back, and that's why we're very, very focused over the last 12 to 15 months on scalable, fully digital back-end providers. And there's not a lot of them out there. Whether you go to Luxembourg, Dublin, or others, you have to search hard to find them. But we think we found them, and it's going to be crucial. Otherwise, this isn't going to scale up.
I'm going to try and bring us in more or less on time, which is about now, but perhaps a few final words from the panel. I mean, Marie, we've just been talking to some extent about technology. You and I were speaking about technology before as well. You're hopeful that technology will provide answers to some of these questions about the retailization of private equity, aren't you?
Yes, and look, I mean, not to repeat what's just been said, but I think it's entirely valid. I think I think the point that we're trying to make, all of us, is that execution is key in this process. We assume that the products are well managed, that the quality of the investment is not to be put in question. What is going to be the key here is that implementation works, and that given the scale that we want this opportunity and that business to take, then we need technology. There's no way around. We need people as well. We need control functions. We need middle and back office to be on top of their game, but we also need access, as we've said several times, so that investors can subscribe digitally, so that they can get their reporting, the capital calls can be made, because I don't think it's necessarily the job of a private banker to run after each client and do it. It's just not going to work, not going to be profitable either. So I think we're also looking at the economics of the business, and it's important for the retail investors, the end investors, and it's as important to the managers, so that it's a viable business.
Okay, I'm going to give the last couple of words to Gorka and then Jose Luis, if you like. You've given us a great quote that you think 2023 is going to be the year of the LTIF. That can be a great quote for you. Gorka. Yeah,
I think we have to mention as a key success factor our love distributors, because let's say in our case, 25% of the business is direct channel, digital channel, but 75% is B2B2C. So yes, we have to collaborate, educate with the distributors in order to give them time, materials, and to integrate the private equity in the advisory services and business line, and then remunerate them, because they spend a lot of time in investment recommendation, investment advice services. So that's key. I mean, in France, at least, if we want to transform the ecosystem and really to democratize the access, we need the French life insurance companies, we need the French pension funds, we need the IFAs, and there is a lot of work in terms of education to do.
Jose Luis, main takeaway, do you think?
Yeah, finally, no. In our case, I mean, we've got 45 billion of liquid funds distributed among our private banking clients. And we've got 6 fund of funds managed by us. We cannot distribute private markets funds directly. we need to create a fund of funds due to all these issues. No, hopefully in the future, when all these things, or maybe through Moonford, get in place, we will be able to distribute directly private market funds. But up to now, we can only do fund of funds.
Right, Frederick from Moonfair, Jose Luis from BBVA Asset Management, Marie from Eben de Rothschild Asset Management, and Gorka from BPI France. Thank you very much for your time today. I hope you got something out of this, everybody.